Hey, good morning, traders. Rick here with Hit and Run Candlesticks. Hey, before we start looking at charts, I want to remind you, check in the chat below. You'll see a link to a free J-Hook ebook. You're welcome to it. Also, a link to the Monday webinar. Every single Monday, we do a webinar in the live trading alerts room. I will be hosting. It starts at 11:45 Eastern every single Monday morning. So there's a link down there for that, and there's that link for that J-Hook ebook that's totally yours. Okay, we'll see everybody in just a second and look at charts. Okay, let's take a look at the market first. And I don't see any real help pre-market. Let's see if I'm doing this right. Let me get this. Huh. You'd think I would know how to do this, huh? Oh, okay, I finally figured out how to turn it on. Thanks for your patience, everybody. So so far the market, what I meant by it's not doing us any favors here or not helping out so much right there. Pre-market, we're just not seeing a great deal of bullishness here. Friday, we ended up with a nice little, what do you want to call that candle? Doji, kind of a spinning top doji, which is nothing more than a doji. Down here at the 50 period moving average, but overall we're still down. So to be both feet, everything full steam ahead bullish, I think we need that market to help us out on there. So right now, with price beneath the trend line, our trend indicator, and beneath the T line here, I think we have to assume that we might be looking at some shorts. Let's draw a line down like this and just follow that trend down. And let's just follow that 50 period moving average up like that. And you can see the wedge that we've created. In trading, we use these wedges a lot. We use shapes. The shapes create chart patterns. The shapes are created by price. We visualize that by, with price action and candlesticks. And right here, we have this wedge shape. So what happens if you're wondering, well, am I to be long or short on this chart? Well, first, you have to have a little bit of patience. And then to be long, you want to wait for that breakout. And to be short, you want to wait for that breakdown. Now, of course, if you're an early riser and you want to jump in beforehand, well, there you go. You're right there. But the wise trader tends to wait to see what the market's going to do, and then you trade off of what the market does. Okay, the Qs are underneath the 50 period moving average, and that makes that a blue ice failure. This is one of those chart patterns that we like a lot. When we start failing that 50 period moving average, that means a lot to a chart, a lot to traders. So what we're looking for is for that to continue down. There's a good chance it tries to move up. It may not be today, may not even be this week, might try to move up, but what we're looking for is that continued downside. Higher lows, lower lows, higher lows, lower lows. Sign of a downtrend. So we'll be watching the Qs right there. Speaking of some shorts, Uber. I was chatting with somebody last night, and I said, yeah, Uber's looking short. And they said, what, are you out of your mind? They're hot. They could have cars with no drivers. I said, yeah, but that's probably not going to be in our lifetime. So unless you're 12 years old, maybe then. The point is, yeah, that may happen. And that could be some of that talk, because I've heard that talk, how AI is going to help Uber and everything. Yeah, well, that's down the road. So I'm going to trade the chart for what the chart is. And the chart is setting up on a blue ice failure. So this is one we're going to take a look at and watch today. On the bullish side, there's this EVLV right here, bull kicker. Excellent bull kicker here. I did a video on this one yesterday. It's in our channel, our YouTube channel, if anyone wanted to watch it. But just nice bull kicker. And here we're pulling back into the box, or at least that's where we're opening. I'd sure like this to pull back a little bit more here. PSTG, possible short. This is another blue ice failure. You can see where price is trending down below the trend indicator and the T line, below the 50-period moving average, and we'll be looking for price to move toward the 200 moving average down here at about 29 or 30 bucks. So we'll be keeping an eye on that one. On the long side, here's CVS. CVS is a favorite, not of mine, but a lot of folks here in the trading room. I don't know why, it just seems to be a favorite. But right now it's trending up, pretty good. It is, doing that J-hook type chart pattern. Oh, by the way, speaking of J-hooks, if anybody would like the J-hook ebook, if you in the YouTube, it's in the or it will be this video. It will be in the chat down below, so you can pick up that ebook there. But this is making, one of those J-hook ebooks. We've got this big, monstrous bullish engulf, and then just simple pullback here, and now we're starting to climb up. So this is a rounded bottom breakout, and still looking for that to move a little bit higher. Another short here is Delta is still looking short, closed below the 50-period moving average, giving us that blue ice failure here below the trend indicator. Trend indicator's green, red. Anytime the trend indicator's red, it doesn't always mean bearishness, but it certainly doesn't mean bullishness. There could be times when, say if Delta was down here sitting around that 200-period moving average and those dots are red, I wouldn't be so quick to short that, but I'm sure as heck not going to buy it either. So one of the things we look for is plenty of room, a good runway to make some money from the 50 down to that 200-period moving average. Netflix is in that category here. Netflix is setting up short. Blue ice failure, maybe headed down toward the 370 area, something like that. Rickster's pointing out Met long. Yes, I think Met's a nice chart. This is a good example of a J-hook, by the way, so make sure you click that link in the chat below the YouTube thing, and you get that ebook there. It kind of explains it a little bit. But this is a perfect J-hook setup. That is in the process of doing it now and has already done it, so you can see it work here. All that, those are little J-hook continuation patterns. Yeah, and there's a lot of those out there right now, by the way. There's a lot of charts setting up for that J-hook continuation pattern. So what's happening is the SPY has pulled back, and that's causing charts to pull back. Well, if we walk backwards, the market has been very bullish. That means charts have been very bullish. So charts have been very bullish. We're pulling back now. When we start seeing them pick out a bottom and start rolling up, those are little continuation patterns setting up, little J-hook patterns, just like the SPY right now. It just needs buyers is what it needs. But if it could put together or find some buyers to step in, well, that's exactly what you're going to have here. That rise, that pullback. Once you break out of this high, you've got the next leg, and that's a J-hook right there. So, all right, I'm out of time here, everybody. Thank you very much. Thanks for being here this Monday, and we'll see you here a little bit later. Hey, don't forget, today at 11:45 Eastern, I'll be over in the live trading alerts room, and we'll be having our Monday live webinar, okay? Thanks, everybody. Take care. See you at the bottom of the hour.